The first time I got paid at my job, I actually thought my employer made a mistake. No, for real, I did. Because the mass was massing. Because you guys know how it goes. You do the interview. Once you get the job, and they offer you the job, they tell you how much you're being paid. You do the maths. Say you're getting paid 10,000 annually, or let's say 12,000 for sake of easy mathematics here. And you say your annual salary is 12,000. Already you know that every month you are getting £1,000 at least. At least. Then if you do overtime and the rest of it, then it tops. So in my mind, I had that at the top of my mind. So when my salary, the very first one dropped my account, I said no. But then what baffled me the most was it appeared I was the only one that was confused, because every other person was going about their business, so nobody was, barging to the manager's office to say what's going on, hey, this, that. Nobody was staging protests. I was saying, what's going on, guys? And nobody explained anything to me. However, it turns out that this difference, or this gap, or this money that I thought was lost, actually has a name. And the moment you understand it, you won't get to be in that situation that I was. My name is Dombony, and this is Adulting 101 with Dombony, the space where we discuss everything around adulthood, from career to money to relationships. And nobody sits you down to discuss this today. Nobody teaches us this in school. We talk about it. Today, let us decode Payslip. So here's the thing. There are actually three things that take this cut from your salary. And we are going to explain these three things in the next couple of minutes. We're going to break it down so we understand it, down to the very last detail. The first one is tax code. So this is a combination of numbers and letters that the HMRC assigns to you. Now, this tells your employer how much of your money is tax-free before tax kicks in. So now, if you're on the wrong tax code, that means, let's say, you probably be will be taxed more, be paying more tax than you are supposed to because of the code. So how do you know if you're on the wrong or the correct tax code? Log into your personal tax account on gov.uk and check it. If you are still unsure, you can give HMRC a ring. But the good news is, if you find out that you're on the wrong tax codes and you've been overpaying for a couple of months, the excess will be paid back to you by HMRC the moment you correct your tax code. So that's the very first one. Your tax code tells the employer how much is tax-free, how much of your money is tax-free before they actually get your money starts being taxed. The other one, national insurance. People frown on this because I think this has gotten a bad reputation, if I say, which is wrong, because people feel people treat it as them being taxed again. But then it's more of your money going to your future self. So your money now going to your future self, that this counts towards your state pension and your statutory sick pay. So think of this money as not money lost, but more of your money now being put into your future, more like your future safety. It counts towards your state pension, So it's not money lost, it's still your money there, but it's been moved forward for you. Okay? So I hope it doesn't get that bad reputation again, because people actually think it's, why are you still taxing me again? Why do I have to pay this? I've paid health insurance. Actually, we don't pay health insurance in the UK. Well, if you're on visa, you do, but depending on the visa as well. Health insurance, I've paid for house insurance, I've paid for so many insurances that we pay for here. Why do I still have to pay national insurance? So just see it as money put into your future safety more, rather than money being lost along the way. And then finally, Pensions auto-enrollment. Trust me, I got the worst advice from somebody when I got my first job, because the person asked me, or well, advised me to opt out of pensions, and instead of contributing that money, say I'm contributing £100 every month, he said I can use that money and build something for myself instead of giving it to the bank or giving it to pensions or whatever. And I listened to him, and that turned out to cost me tens of thousands of pounds. Because by the time I realized it, I've worked for years. Please don't make that mistake, please. I am begging you. The third part is the pensions auto-enrollment. So by law, every employer is supposed to enroll their employees into pensions. So how pension works is some part of your money, say you get paid. This is just for a simulation. You get paid £1,000, and then I take £100 from me as your employer. I take £100 from that £1,000 and put towards your pensions. But now, because I've taken £100 from your money, I have to match it. So depending on the company or where you work, some people match it 50, match it exactly. So if I'm taking 100, I'm giving you 100. Some people, if I'm taking 100, I'm doing times 2, I'm doing times 3, I'm giving you 200, depending on the company. But just see it as free money. Because imagine I'll give you £100 and then you give you another £100 and then you are saving £200 for me. That is free £100. That is free £1,200 in a year. Think of it. Now, of course, it has to be invested somewhere. Depending on how your company works, that is a different ballgame. But the most important thing here is part of the money that is being deducted from your salary goes towards your pension automatically, unless you opt out, which I'm begging you, please do not opt, unless you have extreme, very, 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 very good reason for opting out. But then I would suggest, please do not opt out, because it's almost you robbing yourself. Imagine missing out on free money. If you save £100 for yourself, I'm going to give you another £100. That's £200 being saved. And you've worked for, let's say you worked for 30 years. Imagine how much you've lost. Trust me, when you are 60 years old and you look back and see what your 22-year-old self did for your 60-year-old self, you'll be very grateful. You'll be very thankful for that boy that made that decision not to opt out. So here is what I want you to take from this video. Tax code, national insurance, and pensions. None of these is actually being deducted from you. One ensures fair taxation, one builds your safety net, and one builds your future wealth. So please, when next you get paid, just have a look very well. Look out for these things. And if you feel you're not on the right tax code, give HMRC a call, or you log into your personal tax account and get this fixed. In the next episode, we'll be talking about the money mistake I made that cost me a lot in my 20s. Stay tuned, we'll talk about that one. That's this week on Adulting 101 with Dombony. If you enjoyed this episode, if you learned something from this episode, please hit the subscribe button, comment, and share. Also, send this video to your friends who you believe will benefit from this also.